Hello, my friends, and welcome to Douglas on Trading. Today, we're going to go over why you should never trade big time news. And today, we're specifically going to look at the FOMC and the Oil Inventory Report. Now, to do that, we're going to play back October 30th, which had both of these news events on the same day. And what you might know, or what you probably know, is the reason you don't trade big news is because the market becomes very volatile. Price swings wildly, it's hard to predict, and your risk becomes very great. But what you might not know is why it's doing that to begin with. So to help us see that, what we're going to use is this program to the left here. This is called Bookmap. Bookmap is a visual representation of the DOM, or the order book. All right, so if you take a look at the colorful part of the chart here, these lines, the highlighted lines, kind of the brighter they are, that means the more orders are sitting there in the book. As you can see, like this orange, bright orange line, there's 1,279 orders compared to like 150 to 200 in the rest of the book. Okay, so that's highlighting that that's a high area of volume. And it's also showing you how long that volume's been sitting there. Now, the main thing that we're going to be looking at is we're going to be looking at these highlighted areas, and we're going to be looking at the orders that are sitting here in the book. Okay, these are the resting orders that are waiting. Now, over here is the executed trades. We'll just clear those out, and they'll kind of populate over time. Don't worry about those. And then these little bubbles coming up on the line. This is the price line. And these are executed orders. You don't really need to know about these bubbles for the purpose of this video. So what I want to do first is show you, we're going to have the market open here at 8:30 Central in about a minute. So I want to show you what normal volatility looks like. So sometimes the market open is more volatile than others, but it always gets a little more busy than standard time. So if you can see right now, it's about 8:29 and there's not much going on in the ES. It's pretty slow. But the other thing that I want you to pay attention to on the ES chart specifically for this market open is you had this huge amount of orders here, this 1,277 orders. All right, so let's pull up the ES chart over here. And you can see already that it's starting to push down that price. Now, this is what Bookmap can do for you, is it can show you where the heavy hitters are starting to play. Okay, so let's just chill out here for a few more seconds. We've got about 30 seconds before the market opens, and then you'll see what I call normal volatility. Now, after we see the normal volatility, we'll move up to the Oil Inventory Report, where you'll see major volatility, and then we'll move up to the FOMC, which is ridiculous volatility, okay? All right, so let's give this about 10 more seconds here, guys. Wait a little patiently. And market open. So you can see the price is starting to bounce around a little bit quicker than it was. You're getting these more executed orders are starting to pop in. And it's actually a relatively, for a market open, this day was not that volatile. Some days it's a lot busier than others. But one thing that you can see, especially if you look over here on the chart, is you can see that those big 1,270 resting orders were basically a hindrance to the market going any higher at the open, and it's starting to crash. Okay? So that is regular volatility. Now let's get to the fun part. Let's get to the Oil Inventory Report and see what a little bit crazier volatility looks like. So stick with me, and we'll speed up to that. All right, and we're back. So here we go. I've made the oil chart on Bookmap a lot bigger so you can see things easier. Over here to the right is the standard oil chart. It's just a 5-minute chart, and again, we're on October 30th, and we're about to hit the Oil Inventory Report. So I want you to see what the book looks like right now. Average orders, you know, you've got some bigger ones at 100 and things, but it looks like most people are in around 34 to 40, kind of in that range of resting orders in the book. And what you're going to see as we get closer to 9:30 is this is going to start thinning out. And so you're going to go from that average of the 40s, and it's going to start dropping, and it's going to start getting down to like 10 and 8 and 1 and then even nothing. And that is why, and you'll see that in a minute, but that is why price swings so wildly. There's no resting orders in the book because everybody else has gotten out anticipating the news, except for just a few wild players, I guess. And there's no resting orders in the book to stop price from swinging from one dramatic swing to another. So it just flails around looking for some orders that it can eat up, okay? So we're going to speed this up here. You get the idea of what normal orders look like. So this is just at 30 times speed, so don't pay attention to this real quick. I'm just getting close to the market open. Okay, we are now 1 minute out from the market open. Now you can see what's happened already, all right? Already we've gone from those solid 40s and 35s and 50s across the board, and now we've dropped down. People are anticipating this. You know, it's only a few seconds away. We've got, 23, 16, 13, 15. You know, there's still some big players sitting around. But in this vast area, from 54.84 all the way up to 55.38, it's basically blank in here comparatively to what it was, okay? And it's going to be a little hard to see, but you can see it's thinning out even more. We've got about 15 seconds before this pops. Thinning out even more, thinning out even more. People don't want to play in this mess. And there's just no order sitting around right now. Now you're almost at zero on a number of those, and then bam, now you were zero. See that? So that was on real time. I did not speed that up in any way. Okay? But hopefully you could see what happened. There was no resting orders left in the book to stop price from flailing about. Okay? So that's why you don't trade the news. Now let's zoom in real quick just so you can get a slow motion view. All right, so remember we had 30, 40s, 50s in here, and now this is a few moments before the news comes out, and there's just not much there at all. And then boom. So that's right at 9:30. That's right when the news hits. So that's when somebody comes in and buys everything up. And now you've got zero orders in multiple price ranges. There is not a single order resting in the book at this point, all right? They've all been wiped out. There wasn't much there to begin with. It comes up. There's not a whole lot of resistance up here, but compared to blanks down below, and then in an instant, bam, it goes through all of that nothing, searching for another place where there's resting orders. It comes down, hits that area, and that's where it kind of gets held up for a little bit, at least slowed down. Okay, so that is a great representation of oil. Let's get to the big dog. Let's go to the FOMC, and we'll take a look at how the ES chart behaves during the FOMC announcement, okay? Here we go. All right, here we go. This is going to be the FOMC news report. Now, if you're following along here on the ES in Bookmap, the orders have already thinned out. Not completely yet, but it's about 12:50 on this replay. The report comes out in 10 minutes at 1 p.m. So I just wanted to show you this. We'll sneak back here a little bit. So not that long ago, average orders in here, this is more in the 940 area. Average orders in here were like 348. You've got some 270s. But that's pretty typical about where the price is. It kind of gets 500 levels, those kind of things. But as we get closer and closer to the FOMC report, less and less people want to play. And now we're rocking, these 160s all over the place. So we're going to speed this up here. And you can see it'll start getting thinner and thinner, and then we'll slow it down to real time right before the report comes out. So we're on 10 times speed right now on the replay. And we're still sitting there at those 110s, 160s, kind of in that area. It's getting thinner and thinner. So we're going to start slowing it down now. So this is 1258. So 1258, now you've got these 80s and 90s sitting here. You know, you've got this one big player for whatever reason sitting here at 400. But there's less and less people that want to play. So now we're at 1259. And you can see just how thin it is now. You know, you've got from up here, you've got 84s. You don't break 100 until this one rando guy. And then it's like, you know, 70s, 80s all the way down. So just bear with me. We've got about 25 seconds left before this blows. And notice kind of the highlighted areas too. And there was more highlight back here, but there's just less big players now. All right, we've got 10 seconds before it goes. Now you've got 17s, you've got 6s, you've got 10s. And then you've got 0s, you've got 5s, you've got 4s. You've got 0s all over the place. That's the FOMC just hit. And this is actually one of the slowest FOMC reports I've seen. So price wasn't too terribly volatile here compared to normal. Usually what you'll see is that everything goes dark. All these highlighted areas will just disappear and there'll be nothing. There'll be nothing sitting there. So that was kind of anticlimactic, but you can see how few orders are still here. You know, it's not 1 full minute after report yet, and we're not back to normality, so we're still moving quicker than normal. Let's pull up the oil chart. Let's see if that was affected at all. Yeah. Oh, no, that's the old news. So forget that. All right, we've got people starting to creep back in. It's 1 full minute past the news. We're still not back to normality. It probably will take a few more minutes, maybe longer, for these orders to start populating back in. So I apologize about the anticlimactic event there. Normally, it completely just goes blank. Like there's just nobody left, and then price goes a lot more wild than it did. But I think you guys got the point. You know, when you're going down from like an average of 400 resting orders in the book and you're down to 10s, then things change. Things get a lot more volatile in that situation. So that's it. This has been Douglas on trading. If you want to take your trading to the next level, please consider going after a funding challenge. I'll have a link to that below. And remember also to hit that like button. If you found this video useful, I need your help. I need your subscriptions. Thank you. Happy trading.